So this is section 2, wherein we will discuss about the details and the factors that influence the market and how are things looking underneath the market, underneath the upper scenario or underneath the market as we see, right? So we have to look into the factors, right? So in this case, we have a lot of factors which we have discussed for last 2 to 3 weeks. The objective of discussing all of these is like to understand how market bottoms out and how to play the scenario when the market bottoms out and what should be the strategy going forward, right? So we all are seeing all of these things. So one thing that we have discussed for last 2 to 3 weeks is first the ADX, the directional index, the indicator which was trending in a negative direction for quite a while, right? It has flattened out like at this point of time, and thereafter it is on a declining scenario, which means that the negative trend has weakened and positive trend is picking up. For example, if you look into this data, so from 27 till 3031, the positive trend has picked up. And if you look into this one from 46, 47, or say 52, this has reduced to 31, right? So there has been a substantial decline in the negative trend, which means that the market has lost its negative trend. Negative means positive. And this is where a slight delta is there for the positive trend. It has not actually picked up, right? So this stage we see right now is called a transition state, wherein the negative momentum has been lost. The positive momentum is countering the negative momentum, but the positive momentum would try to build up in times going forward, okay? And that would lead to ADX further rising up, right? So the trend of ADX as a whole is reducing downward, which shows that this is a transition phase, okay? So that is the first inference that we get out of this data. Next is distribution days, right? Distribution days have reduced drastically in last 3 weeks, right? At one point of time, near to bottom of the market, we have had a distribution day count of 9, right? That was very, very high. Right now, it has reduced more than half, and currently we are standing around 4, which is a very good sign, right? We have not captured almost all the EMIs, and this week we might capture a few. So earlier we have had like all the EMAs which were standing intact, but right now we have none, right? Next is VIX has reduced nicely. So at one point of time we had VIX standing around 28, right? That was bad. Now we have VIX standing at 17. So almost a 10, 11 percentage decline in VIX. That is a very nice scenario. And it has dropped below 20. So that's a very good sign, right? So anything below 20, I'm comfortable with, right? And if it reduces below 15, very, very good. Nothing better than that, right? And if there happens to be a no event or no volatility kind of scenario, then it would settle around 11, 12, 13 or something like that. Okay. So right now, the next thing that we need to look out for is reduction in VIX going forward. That is first, the dropping point would be 15. Thereafter, it should drop towards 14, 13, 12, and settle around 12, something around that. Okay. So that would be the best scenario that we would have, right? So that is point number 2. Point number 3, we have a nice swing indication wherein we were sitting on our hands for quite a long time that we did not have great patterns or setups to play out swing, right? So, and right now it has turned green and it is showing as 1, which shows that the market is ripe open for the swing setups wherein a lot of swing opportunities might emerge in times going forward. That is point number 3. Point number 4, at one point of time, we have had like only 47 stocks in stage 2. That is very low. Almost 1% of the stocks in the market were in stage 2. That is a very bad scenario. Right now, we have this number in the range of 178, right? That is a nice scenario wherein we have a nice almost 4x kind of increase in the number of stocks in stage 2, and this is kind of all positive. Every day we have kind of added the number of stocks in stage 2, a lot of stocks in stage 2. That's a good sign, and a very good sign of a bottoming scenario is we have a lot of days where we have more than say 20% of the stocks being added in stage 2. For example, if we say this day, right, this is a very bad day. Okay, this is kind of the worst day which I indicated that happened in last 5 years, right? One of the top 2 worst days that happened. We discussed about that in last 2 weeks. because almost 38% of the stocks went out of stage two in one go. Thereafter, if you see that 34% stocks were added in stage two, 24% stock, then 33, 18, 38, right? This is a fantastic day, right? On a follow through day, we have had like 38% of the stocks being added to stage two. That's one of the finest scenarios to be in. And thereafter, it has declined, but it's good, right? 5%, 9%, 6% kind of stocks are being added, right? If we see like more than 10% stock, more than 20% stocks being added in stage two every day, right? That's a very good scenario. You have to count the days, right? For example, out of 10 to 15 days, if at least one third of the days are like when you have more than 10%, 20%, 30% stocks being added in stage two, that depicts the bottoming scenario. That is point number uh, four for you. Yes, so one should look into such a scenario where a lot of stocks are being added in stage two, and that depicts the bottoming of the market. Now we'll move towards the next thing. I'm discussing a lot more right now because I am feeling to share a lot more today. So this is PTC called as Power Trend Count, wherein we try to count the number of stocks which are in power trend, right? Power trend is a very powerful scenario wherein a stock goes into an upward 45-degree uphill for quite a long time, right? I'll not define the time right now, but it catches the those stocks which are in power trend, right? That is a very good scenario. So when the market bottoms and it moves in one sideways, then this number tends to increase, right? In coming weeks, we would see this number crossing 100, even 150 we might hit, right? In times going forward. Just look out for this number. Next, I'll move towards right hand side and I'll tell you the biggest discussion of this week, right? Last week, I told you guys that there is an indicator called as BAM, right? If you revisit our last discussion, then we talked about an indicator called as BAM, and I told that it is very plausible, very highly likely, and the probability is very high for us to hit the BAM positive. By BAM positive, I mean that this is an indicator uh, whose accuracy is kind of more than 97%, I would say. Okay, the theory I discussed last week was if there happens to be a BAM positive day, right? It means that the bottom is exactly at place. Okay, it has 97% kind of accuracy across all the years. I have backtested this indicator for last 10, 15 years, and it has turned out to be true across all the bottoming out scenario. We need to be careful if we are looking at a bottom or a short term blip or a blip in the market, and we are trying to analyze with respect to BAM, right? What does that mean? That means that we have a nice BAM scenario where this number has turned positive for last 3 days, and this is a rare scenario. Basically, I'll show you the historical data. Basically, when there happens to be a crash, for example, the last big crash that happened was in COVID, 2020 decline, COVID fall that happened for a few days, but the market declined by 38% and the stocks declined by 50 to 60%. And at that point of time, when the market bottomed, I'll show you how this BAM turned positive and how market rallied thereafter. Okay, so this is a rare incidence that is happening in last 15 years. I would say that for 3 continuous days we are seeing BAM positive, right? Which shows that there is a ferocious reversal recovery that is happening in the market, right? For those of guys, right, who are thinking that okay, it's a short-term blip or it's just moving that way, it's not going to sustain stuff like that. This is not the case. Actually, I'll show you with respect to numbers. And right now we have the BAM numbers 1.94, 2.5, and 2.29. It peaked out at 2.5, which is kind of high, obviously. And on Friday it was 2.29, right? And eventually we'll see it declining going forward because the ferocious rally in the market does not continue for long, right? And just backtest this number, I'll show you right now. I'll filter this out, this BAM data with respect to highest to lowest for last whatever years. Say this is kind of 10 years data, right? For example, this is 10 years data, and we are looking at the BAM indication that we have got. And just understand if we have say uh, how many trading days, for example, say 230 or 225 trading days per annum, right? And if we have kind of 10 years data, okay, take it as 2000, okay, round of 2000. Sorry, 200, 10 years, 2000, okay. So whatever we are seeing right now is 2000 days ka data. Okay, 2000 days. Okay. Now, if you see BAM positive, how many days are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days, okay? Out of 2000 trading days in last 10 years, from January 2017 till April and say Friday of April this year, right? We have had only 10 days of BAM positive. Just understand how scarce this indication is, okay? This is a rare indication and this is a very scarce indication that happens across all the phases of the market, okay? Now, I'll give you a background. From 2018 peak of the market till 2020 decline, there was a sharp small cap and mid cap decline. It happened till the COVID crash happened. Okay, so that is one cycle. Beyond 20 till 2022, 23, there was sharp up move happened, and thereafter a short decline happened, and thereafter we have seen two more declines, short declines like 10-12%. And this was kind of a decline, but that was not so big, right? I mean, correction happens after 20% decline. The Nifty did not decline even 20%. Okay, but okay, I gave you a short description of the market scenario in last 10 years. Now we are talking about the BAM, right? So the BAM data that you can see right now, it is the highest ever in last 10 years, 2.5. This is the data for Thursday, right? This is the highest ever in last 10 years, which shows you how ferocious the reversal recovery is happening right now in the Indian market. Okay, it is 2.5 and second number is 2.29. Okay, it is more ferocious than what happened during COVID times. Okay, just understand this thing. The second number is 2.29, which happened on Friday. Okay, Thursday and Friday are the two best BAM days that happened in last 10 years. Now I'll go to the left hand side. Just remember this number 2.15 till 1.90. Okay, I'll just go to the left hand side and I'll show you when all of these things happened. So these two happened right now, 26, 26, this happened right now. This happened in June 2020, okay? So I'll show you more around this. Just see this one, 2020, okay? Then June 2020, 24 May, it happened once, okay? This is 26, it happened now, okay? 3 days, okay? 26, 26, 26, 3 done. 25 May, it happened once. 20 May, it happened in April, 20 April 2020, June. So 2 months are common in COVID fall. One is April, second one is June. So actual fall through day that happened in the market during the COVID times, right? So it happened around April, right? I look into the data, but it was 9th to 22nd April, multiple fall through days happened. I'll show you that data also. But for now, you look into, so fall through happens first, then BAM happens. Just understand this thing, okay? BAM is an indication of how things are behaving after a bottom is in place. For example, we talked about day one, 22,182. Thereafter, we talked about day four, that is fall through day. Thereafter, we are talking about BAM. So basically, we are testing the scenarios in the market where we found out the bottom. We found out if bottom is true or not by fall through day. Now we are finding out if all of these scenarios are true or not. That is through BAM. Okay. Now you see 24th, right? 20 April 2020, June 2020, June 2020, April 20, June 20. Okay. So 2 days in April it happened, and almost 4 days in June it happened, and all the days right now in this one. 2026 decline April it has happened, right? So basically April is the common month. Okay. Then and you guys, if you remember the numbers, right? So for example, 20 April Nifty was around 9,262, kind of rare. I mean, for you or those of you guys who might never seen in your life the kind of ticker Nifty at 9,000. Right now we are standing around 24,000, right? So it's kind of rare to see Nifty at 9,000. BAM happened at that time. Okay. Now, point number two, we have to see if BAM is true or not. So out of 10 days, we have to exclude those days where BAM is not true. I'll tell you when it is not true. For example, this day, right, 2025, right? So basically, the India VIX was very, very okay. If you see 16 was the number for India VIX, right? So which means that volatility is not so high, which means that crash might not be there. It might be that, okay, after a short blip, Nifty is trying to recover ferociously, okay? and that is why. And also, it was ever the moving average. All the moving averages were kind of fine except one. Now, distribution day count was kind of two, right, which is kind of low, right? It's kind of rare, which means that this BAM happened during an uptrend in the market, and that too when market did not crash, which means that we can ignore this indication of BAM, right? This is ignored. Next is 2024, where it is this one, right? This time, if you see in 2024, we have had all the moving averages. This is very nice. Distribution day is kind of very okay, is very nice. And then India VIX is 13, right? There is nothing, right? I mean, India VIX is around 13 or 14. It does not matter, right? So basically, we have ignored 2 days of BAM, which is 2024 cut decline and the reversal recovery. It was in a which we can conclude that this is a decline in a bull market. So there are 2 points of decline. One that happens in a bear market. Okay, for example, we can say that 2020 was a bear market decline. We did not hit the bear market right now, but most of the stocks in small cap or mid cap were already declined by 50-60%, right? It was a 2018 to 2020 wala scenario. Okay. So current BAM stands true. So 2024 ka BAM and 2024 ka BAM does not stand true. Okay. We remove these two BAMs, right? We are left with 8 BAMs. Okay. Out of that, uh, three have happened right now, and apart from that, everything else happened in April and June of 2020. So we have only two indications in last 10 years, which is 2020 decline BAM and 2026 decline BAM. Got it. So that increases the accuracy of this indicator so much. Okay. So everything that we have to see with respect to context, right? And I'll show you the fall through day as I told you. So if you look into this one fall through day, I'll show you the 2020 data. This is fine. Okay, fantastic. So first fall through day in COVID decline happened in 20 March 2020, right? And the fall through date that happened for us right now is around 23 March 2020, so 26. So there is a lot of similarity. Okay. And beyond that, you can see that a lot of so fall through day is very common. Basically, if you look into this data, we can see that 50s or say number between 60 to 100 is the days that we have had a fall through day. Okay, got it. So that is why we should not depend so much on a fall through day, but a lot much on the BAM, right? So I'll move to the right hand side again. Perfect. So this is a nice indication, and that is why I'm saying that the market has bottomed, and all the factors that we were looking for in last 2 weeks, right? That stands true, and everything seems to be okay. It's just that we are in a very sharp lockout rally, which needs to fizzle out, and then a nice consolidation should happen on the right hand side. Okay. By that I mean that the market should consolidate and come down and rest, and things should ease out, right? And we'll move to the right hand side and see how things are on the right hand side and then conclude this section. So basically, we look into the right hand side. So everything is kind of green, right? So basically, the number of stocks making new 52-week high is far higher than the number of stocks making new 52-week low. It's not that high, I would say, because during the bottom, we can see that almost 944 stocks, the delta was around 944, which was kind of very high, right? Right now, we are around 97, 88 or something. So there is a segment in the market where there are stocks which are not declining. Okay, which means that the stocks, the downfall of the stocks is kind of arrested, but there are stocks which are making new 52-week highs, right? So that is why we are saying this delta is positive. This is a good sign, right? What's kind of not so good? We are in a very heated market right now, which means that the reversal recovery or the lockout rally that is happening is kind of very heated. Okay, everyone wants to kind of lap up everything based on news and stuff like that. So how can we say that the numbers have increased big time? So as I told you, that the bottom usually happens when these numbers turn in single digit, right? So you can see that this was kind of a single digit number. Okay, the short term peak, I would say short term peak out happens when the number is very extended. Right now, we have almost 98% of stocks above 10 DMA. That is very high. 97% of the stocks above 21 EMA. Again, very high. 50 DMA Above that, it's 81%. This is expanding, right? So a lot of stocks are crossing over the 50 DMA and it's kind of expanding. Next, we have 100 DMA, 52% stocks. 200 DMA is kind of low, right? So almost 30% of the stocks, 29% of the stocks are above 200 DMA. But that is kind of also expanding nicely. Now, the heated thing is like above 50 RSI, 96% of the stocks are above 50 RSI. MACD has turned positive for 98% of the stocks, right? So basically, we can see that a lot of these indicators are kind of into a heated zone where we can say that things need to fizzle out. By that, I mean things should go into constellation for next 1 to 3 weeks and they should settle down because see, it's a V-shaped recovery, V-shaped blockout rally. Beyond that, things are extended, okay? They're extended of their moving averages. People are chasing stocks, people are chasing like anything, okay? And that is the scenario that we are looking right now. And we'll conclude with this thing. Like we have understood a lot of things in section 2 today. And this is for everyone to understand how we analyze things about the market when it's kind of bottoming out, how things look when market moves in a lockout rally after it's bottomed out, and what could be the scenarios going forward, right?